computer. Okay. And let's start like how much you know. And then according to that level, I'll start teaching. And what we are planning is we're gonna focus on the basic first. And then we'll move on to the using how we can make sure like whatever we are thinking can happen. And we also will work on our risk management, and because which is very much important than anything else. So anybody wants to share their experience and what the issues they have, specifically like finding the labels or something, and then we'll take it from there. Anybody want to share?
Yes, Jigar, actually, I think everybody knows the basics.
Okay.
So, but we don't know the advanced thing, for example, how to find the levels accurately and the directions of the stock.
Okay. Everybody knows what are the what do you call the candles to look for? Candle to look for. Everybody knows?
I think, Jigar, we should have at least what you are saying. We should go with the candle also.
Okay. Yeah. Okay. No problem. Okay. No problem. Let's go. Let's go start with the candles. I will come like a second. First, let's go for the support and resistance, and then we'll see what kind of candles we are looking at the support and resistance. Can everybody see my screen?
Yes.
Okay. Now let's see. So just one question, like how you guys see the chart? Like anybody wants to share their experience, and then I'll say how I see my chart. Anybody want to share how they see the chart? What they look for first?
Basically,
yeah, basically how they if I want to see the Baba, and this is Baba, right? How do you see the chart first? What do you look for?
Honestly, if you ask me, I go with the what is it when it's if it's uptrending, like I try to get it. I don't have much of an understanding when it comes to graph, so
okay,
that's where am I at? Yeah.
Okay, that's the okay. About the others?
Basically, we saw like right now, if candle is going like in the uptrend, like trend, sorry.
Okay.
Yeah, then we go into more details about the candles, which pattern it might be. Like I still don't remember some like uptrend or reversal patterns candles. Yeah.
Okay. So was it Vanit? Okay, Shama and Harish Bhai, like do you want to share anything?
Yes.
Yeah, I just said it in the first place. Yeah, sorry. Go ahead.
Okay.
Yes, this is Amjad. Actually, I used a few indicators. For example, moving averages, I use 20 period, 50, and 200.
Okay.
Alongside, I use VWAP, and I also use Hull moving average. So in indicators, I use RSI, MACD, and momentum indicators.
Okay. So what I would suggest everybody, and nobody says like what time frame do you guys use first?
I use 5 minute and 30 minute.
That's for the day trade, right? Okay. But how? Okay. So before anything else, let's see how to see the chart. Okay, and we'll come to the candlesticks and everything, because each candle is saying something, right? Everybody knows like opening and closing and everything. So let's see the price action. For me, when I see the chart, I usually don't look for an indicator, I look for the chart first, and then can get the confirmation from the moving averages to make sure whenever, like you might see, like I give the tukas, like when Baba was like around, this is like a day chart. Let me just put it on the day, right? So Baba was around like this place, right? If you see, it was around here. When I said that Baba is a downtrending, like, and then it went up, but again, it has to come down. And my planning was to come around like 130, but it kind of took reverse from 137. Again, it might come back. no issues on those things. It happens, right? The price can move on, take the support from anywhere they want. You might see that, okay, I had like so much indicators here, because some of the indicators I'm kind of researching, which can give me like more confirmation. And some of the indicator are just because you want to get the confirmation from one indicator, then the second, make sure you, when you're predicting something, how it's supposed to go. So first of all, whenever you are looking at the chart, rather than looking at the like moving averages and anything, go to the monthly. Okay. Now, when you are on a monthly, I'm just gonna see. When you are on a monthly, let's see. This is like a basic, and we're gonna start like a very deep into these things. Okay. So don't worry about those things. And if you have any question or concern, please ask me. And again, like I'm telling, like my style will be like totally different than what your style. So it's okay, because everybody see the charts the way they are taught. But I'm gonna share the way I look at the chart. Okay. So what I do usually, like any call, like if somebody wants to give me any ticker to look for, I usually look for the monthly. When I look for the monthly, this each candle is a monthly, right? And then you can see clearly it's making our higher highs and higher lows when it was going upstairs, and it's making like lower lows and lower highs. Everybody knows what is lower lows and lower highs, or no?
Yeah. Yeah.
Yes.
Okay, so and I don't want to go into that more into the details of those things, right? So if you see here, when Baba was around probably here, right, you can clearly see that is coming down. And at the same time, if I just put the like trend line like here, usually whenever the stop, I'm just gonna see, I'm gonna put Baba. Whenever the price is going like up, like in this direction, I'm just gonna say high chances of this kind of price to break this trend line and retest it and then come. Okay, that's the very basic. You might know it, but just kind of confirming, like this is how it works. The price can, and if the price is going like a downside, like, so the chances of it to break it out from here to here and then go up is very high. This is very basic for any chart pattern, what we're gonna do later. Okay, I'm just gonna remove all the drawings. Remove drawings. Okay.
So when you say that, is that only in the monthly time frame, or
Yeah.
does it apply to any time frame?
Any time frame is whether it's like a 1 minute, 5 minutes, 10 minutes, 15 minutes, whatever the time frame you're looking into. Second thing which you need to remember, which time frame is very stronger. If you wanna share, which one is the more stronger?
I guess 5 minutes, if I'm not wrong.
Yeah. So the bigger the time frame, stronger it is. Okay. Bigger the time frame, stronger it is. What I mean by that one is like when you see the price is going uptrend, like for a long period of time, like it started in like 2015, right? And if you just kind of connect this dot to this one, and I'm gonna connect like straight line, right? If you see like this, what do you think? The price was moving higher high every time, but it gave the like a breakout somewhere in July, right? What happens when they give the breakout? Because this is monthly, and if I go smaller time frame, and if you see here, it still matches all the lines, right? I did it only one monthly, and it's on daily, weekly is almost coming. And if you see here, it gives the breakout. Whenever it gives the breakout, it has to touch again, and then it falls, and then it of course is going to go up, and then it's going to continue its journey, unless the news comes in, or unless the enough support has been provided on the bottom. The stock gonna continue its journey, right? So for an example, so this is daily, right? Weekly. And now if you go on a daily, I'm just gonna keep those line on. If I'm going on a daily, this trend line still meets, but you will see some of this like a bear trap is common because we did it our trend line on the monthly. So even if you're on daily, if you see here, when the price gave the breakout, it did touch it and then fall. It always goes up, come back, goes up, come back, unless, for an example, for Baba, unless this area, unless the price gives the closing about 178, we can still say the price has not changed the course of its direction, which is in downtrend. So when in the downtrend, you shouldn't be putting your money for the long. Day trading is different, but when I'm saying like long, that means like you're investing for longer period of time. Okay, so if somebody says what price Baba should invest, I would say let this come to around this area about 153, and this might be in the area of interest too. Let it come around and then we'll see. Or if this holds this level, for an example. Okay.
So how we know that it will come down?
Okay. So that was the question from, you can find it from the monthly. That the question has to be asked in the monthly. And now at the same time, we're gonna use the EMA, which is 20, 50. I just started with the 124 because like there is some research I'm doing it. So let me just put that in a change it to the 100. I like 100, 200, and 400.
You mind briefly saying what is EMA?
Oh yeah. Okay.
Yes.
Okay. So there are two EMA which we use. Two moving averages. What is moving average? Moving average is nothing but the sum of the period. Like if I said 20 moving average, that means like a 20 days. If it's 20, like if it's 5 minute chart, that's like last for the 5 minutes, for the last 25 minutes, that means like about 100 minutes. It's a period, like whether it's like a 1 day, if you like 1 hour, when you say, for an example, 1 hour, just give me a minute. So when I say like 1 hour, so when I say refer to the 20 moving average, 20 EMA for 1 hour, that means like for the last 20 hours, it counts. Okay. That's for the moving average. EMA does, what does EMA does is like EMA gives like a more preference to the closer the time frame. So for an example, I'm looking around this here. Okay. Baba gonna go down. By looking at this one, we can say Baba gonna go down next week. How? I'm gonna come on those things. So if you see here, whenever I say like 20 EMA, so which is green here, this 20 EMA will act as a support and the resistance as like the other EMA. So this 20 EMA will count last 20 hours. So from here, which will be like 1, say this is 1, and then go back, say for an example, this is 20. Okay. If it's the simple moving average, that means the calculations from here to here is unbiased. Like that means like it gives the same weightage. Whereas the EMA will give the more weightage to the closer to the, like whatever the price you are on. So this will give a more preference than this one. So the weightage is kind of completely different. So in a simple word, for an example, if I go to the Excel sheet.
So where we can see the EMA?
Okay, so you go to the indicator. Go to the indicator. If you are using the TradingView free software, look for the EMA. When you put the which are built in, then you only get one indicator. But when you look for this one like 20, 50, 100 to 200, then you get like around 4 in one, right? So like you can use the like plot 4 EMA in one indicator. So that's way you are minimizing the use of the indicator which is allowed in the trading view. Trading view allows only 3 indicators to use at the same time. So, but if I put this individual EMA like this one, that means I'm not gonna be able to use another indicator. So what I do use is like 20, 50, 100 and 200 in a one indicator. So now I have like 2 more space to use the another indicator. Okay, so if you're using the free version of the trading view. So the question is like, why and what indicator, which EMA we need to use. Okay, the question is which EMA we need to use. Usually people use 21 EMA or the 20 EMA, both are the same. For me, I usually use 20, 50, 100, 200 and 400.
So
And
20 EMA mean 20 days time period?
20 period.
20,
if you like
20 period mean 20 days, 20 hours?
Depending on the time frame, depending on your time frame.
Okay.
Okay, so if I am here, say this is like an hourly chart. So this is like a last 20 hours of average, like from this average, which is like, say for an example, price is around 167, right? So this 167 is for the last 20 hours. So probably from, say this is like 20, right, for an example. So from here to here, this is the average, which is sufficient for the day trader. Okay, you need to know the just only that one. Bigger the time frame, like which is like a daily, bigger the stronger the EMA. Say for an example, here the black one, for me I always use the green one is the smallest and the black one is the highest. That's like me, you can always change the color. So whenever the price on a daily, let me just put it on a weekly. Okay, let me just put it on a weekly.
So for a day trading,
yeah,
which one is the best? Like 20.
For day trading, I will come to the 4, 9 and 18, which I will explain to you later. There are different ways you can use a different time frame. Okay, for the day trading, I will teach you how to plot the support and resistance for the day trading and how to plot the support and resistance for the investment purpose. Okay, just bear with me. So I'm just gonna cancel some of the averages here, which you might. I'm just gonna put 100 on a move, 100 I'm just gonna die. Okay, so I have 20, 50, 200 and 400. Okay, I'm gonna put this trend line on a hold. So if you see, this is the weekly time frame. What is happening here? Can anybody see how's the price is reacting to the different EMA? Anybody want to interpret the chart? And then I will explain how it works. Anybody want to take a shot?
Like it's
and do it, because why? Because if you say, then I'll realize like what's your thought process are, and I can correct it.
like testing 20 moving average.
20, yeah.
And I'm not sure about the blue line.
Blue is 200. Blue is 200.
Yeah.
200 EMA. So green is 20. This is 50, the orange, and this is 200.
So trend is downward because 20 has just crossed the 200.
Yeah.
So it is making lower lows and lower highs.
Lower lows and lower highs, right? But if you see here, the price, and that happened on like November 20, it breached it, right? So whenever the 20 is breached, just you need to be like more cautious. And this is on a weekly, okay? This is on a weekly. That means like 20 weeks of, so that means almost a half a year. The price is not able to hold this position. So whenever you see this kind of pattern, like the price is breached by breach into the 20, that means like you need to be more cautious that price is going in a downtrend, the trend has been getting changed. Okay, you need to be cautious.
Sorry.
Yeah, go ahead.
When these are the 20, 50, and 100.
Yeah, 20, 50, and 200. This is
Moving at
EMA. Yeah, 20, 50, 100, 200.
20, 50, and 200.
Yeah.
EMA.
Yeah.
So when we are looking the weekly chart, and if the blue line is 100,
blue line is a 200,
and green is
20,
and yellow,
yeah, it's 50.
Oh, the 50 is in between 220 and 200.
Yeah.
Okay, so if the 20 is crossing 50 and 200, so that means that is a downtrend.
Yeah, but the downtrend, your downtrend was confirmed here. Okay. But what I'm saying is
just crossing the 150.
Yeah, this is the 20 is crossing 50. This is called a death crossover, right? This is called death crossover. That means like whenever the smaller time frame crosses the bigger time frame is called a death crossover. If it crosses downwards, okay, if this one is from top to bottom is going down, this is called a death crossover. However, when the price like here 20 is crossing going up and 50 is going bottom, that's called uptrend. Now you will question me like, okay, this crossed here, how come you'd say like it's not going down? Like why we can't say this is the bottom? If you see here, even here, even this price, whenever it breached the 20, it did come down. And how much it came? Almost 16%, which is 20 EMA. Okay, so when 20 EMA was breached on a weekly, then it came like 16%. So whenever you need to be like always keep that in your mind that if the 20 EMA is broken in a higher time frame, you need to be cautious that the price may start the downtrend move. Okay, here the one thing which also you need to remember is which area is taking support from. Okay, which area the price is taking support from, whether it's taking support from the 50. We'll put it on a daily and then we'll know. Each stock has a different moving averages where they react more. Some will react to the 20 and take the support and move higher. Some will react to the 50, take the support and move higher. Some will take support to the 100 and then move higher. So each stock has a different characteristic. So you need to remember whatever the stock you are seeing reacts to the which moving average is better. So for an example, I'm going on a daily. Okay, let's probably here. Okay. See here. So whenever this kind of structure happens, this is the best place to get entry in any stock. This is called convergence. Convergence is like whenever the like 4 or 5 EMA gathers together and then kind of separate from each other. Okay, that's where you, if you really want to invest, this is the best place to invest. This is the best area to invest. And if you invest on those one and whenever the 20 is breached, you can get out. You don't even have to remember. If you are like a long-term investor, just follow one like simple formula. If it's over 20, you will buy it. If it's over 20, below 20, you're not going to buy it. You won't be stuck in any stock.
Sorry, say it again. Is if it is over 20.
Yeah, 20 EMA. You can make your own rules. Like you want to make sometimes it reacts to the 50. So you can say like, okay, if the price is above 50 EMA, I'm gonna buy it. If the price is below 50 EMA, I'm gonna sell it, no matter what, whether you're making profit or loss. Okay, for the investment purpose.
So
Yeah.
above 20, you're gonna sell it. So
Above the 20, you're gonna buy it. Below 20, you're gonna sell it.
so your green
Green is 20.
so green is 20.
Yeah.
So if it is above the 20, so
Yeah.
we need to sell it, right?
No, above 20, that means you're gonna, whenever the price is above 20, you will buy it. For you, 20, you're gonna buy it. Whenever it breaches the 20, which is here, you're gonna sell it. You're gonna come out from your position.
Like if it breach, if it go
Below the 20. If it goes below the 20, you're gonna move out from your position.
okay.
Or you can, like, people have the different, people just take the 200 as a support. Like some people say, okay, whenever, like, there are different criteria. That's a set rule for you. So for an example, you say, whenever the price is above 200 EMA, which is blue here, and then that will be position for me, will be the longer position that you're gonna go long on those kind of position. Whenever the price is below the 20 EMA, you're gonna come out from your position. So like for an example, I would say here, you enter here, okay? You come out here. Then it went above here, above, and the next day it breached out, you get out, that's fine. But what happens in those things, you will avoid this drawdown. You know what I mean? Like you will avoid this. You might have like so many in and out, but you will avoid this sudden fall. So for an example, price breached here, and you already came out from like this area, right? You know, you just came out from this area. So you just saved yourself so much money, because from here it came down so much, like from 315 to 224, and that's almost like 24% drawdown on your money, right? So make yourself a rule, whether you're making 20, 50, 100, 200 is up to you and your risk appetite.
So why we not get out when it is above the 20? Like if
above the 20 is uptrend. Above the 20 is uptrend. The price is moving up.
Oh, okay, above the 20 is uptrend.
Yeah, for you, so you need to finalize.
Yeah, I'm talking about a little bit more. If you move the mouse.
Okay.
No, the other way. No, sorry.
Okay. Where?
No, up.
Up.
Sorry. No, above the 20. I mean,
Here. Yeah.
So why we not deciding to get out?
Here. That's what I say. Like when the price moved here, this area, like breached it, then you get out.
Okay.
When it breached here, 20, you get out. Breached here, 20, get out. So now you have to use your brain. You are always saying like, okay, price goes to the 20, comes to the 50, and it takes a support. So rather than 20 getting out at the 20, you just wait until the 50 is breached, right? Because it's taking support 50 here. It's taking support 50 here. As long as it's above 50, you're gonna be in the trade. As long as it's above 50.
Jigar bhai, when we say it's breached means the candle closed below.
Candle closed
right?
below. Yeah. Whenever I say like breach, that means candle closed below.
Thank you.
Okay. So that will be your rules. Like, so that means like, you know, people like, I know so many people got stuck like in Baba when it was like a high, right? And they cannot sell it because they feel that, okay, Baba is a good company and it come back. There is no good such company in the world which cannot fall. In Corona time, everybody fall. In the recession time, everybody fall, right? So good companies, they fine. As long as they meet your criteria, you're on your set rule, they are good. If they don't meet your criteria, they are not good for you. They might be good for others. But for you, you need to have some set of rule of criteria that you just want to follow on those criteria. So for an example, plug, right? people will say, okay, the plug is very good company. I don't have doubt. I don't, sometimes when I give the call, I don't even know what they do. I don't know, because for me, when you're doing the technical analysis, for you is only matter is like what the chart says. For me, what I believe is chart knows better than any fundamentals. Say for an example, if you have just followed the 20 EMA rule, you would have come out here, which is $60. Would you buy on 60? Because it's already below 20. If you're following 50, you would come out at 51, right? And since then is in downtrend, right? Since then, if you see it's a downtrend, and now let me see here. When it comes to the above 50, you get in here. Like we can, nobody stops you. Come here and get it. Does anybody stop you? No. You just take your call and they say, okay, it's about 20. Now taking support from like 200. And then you go for longer, because for you, your rules are most important than the stock. Otherwise, you will be stuck in a stock for longer. I'm not sure, like anybody stuck in any stock?
I am stuck in LAZR.
Which one?
LAZR, I bought at 38.
Okay, which one? Can you spell it for me, please?
LAZR.
Laser. Okay. Laser. Okay. Let's see laser, like analyze, right? And if you see here, if you follow your rules, do you think you're gonna get stuck? Just simple. We are like not going into like a different. If you follow your rule like 20 or 50, right? 20 or 50, whatever the rules you want to follow, you would have come out at 30. You would not even buy at 30. Right?
Yes, exactly.
So what I mean to say is like, just follow one simple rule for yourself. Like, doesn't matter what I say, what your friend says, but make a set of rules that you're not going to buy if the price is below 20. Or
Mr. Jigar, I have a question, right beside that, it crosses the 50 again. So how do we identify, is it going to continue the trend right beside on? Yeah, right there.
This
right
one, right? Okay.
Yeah.
So that's why I say, like, if you're following the rules, that means you're going to buy above 50, sell below 50, for an example. You get it here. You get it here, for an example. Your stop loss hit here already on the second day. You take a loss.
Then we get out at that point.
Yeah. So when you do like 10 times or 15 times, you will get a small loss, but your profit will be bigger.
Yeah.
Right? Because so for an example, this is 50. Above it went up to 50 and you get out. It went up to the 50, you get out. So your stop loss like it's very, very small. When you go for we'll go and discuss the support and resistance. We'll say when exactly you need to get in. Right?
Okay, in related to that, I have a continuous question. So when we are referring to, let's say, 20, 50, and then 200, right? So when we say 20, that means 20, this is day, right? So 20-day average, 50 days average. So it's crossing basically one 20-day average and the 50 days average. And when it goes all the way down, that means 200 days average. That's where we meet, and that's it, right? That's what we are referring to basically.
Yeah. So when I say 20 and when it's a daily, so that means like 20 days. And when I say 20 week, for an example.
Yeah.
And again, this is the lagging indicator. Okay. So you will have got some issues. Like people will have an issue with the lagging indicator, but like always remember, either the price will move to the moving average or the moving average will move to the price. They have to meet somewhere, no matter what. And that's the basic rules of averaging, that price and the average has to meet somewhere. The line has to go up or the price has to come down to meet. They cannot live without each other meeting for a longer period of time. Okay. So if you see here on 20, as per our rules, even if you're following 20 EMA, you will be get out at 26. Again, you went up 27, get out. You will make a loss. No doubt about it. But whenever you get in, you will have a bigger profit. Okay. So just follow one rule. Just follow one rule. I pick one EMA, 50, probably 20 or 50, because 200 is like 200 days is like too longer, like too much far. So always, and a second rule which you need to remember, if you want to go longer, you don't want your 200 EMA on the top of it. You want your 200 EMA below the 50 and the 20. That's the law. Another rules you need to remember. You don't want to go when the price is below 200. Go for long. That means like for the investment purpose. Okay. For the investment purpose. Say here, if you see here, if you, do you want to go long? I don't want to go long here on laser. I don't want to go long here. Why? Because this black line is my 400 EMA. And the price is struggling at 400 EMA. I don't want to go long on those kind of stuff. Let it go. Let it come to your level.
Why you don't want to go long?
Because like, remember, when I say 400 EMA, that means like the average for the last 400 days. That means over 1.5 years.
Oh, if it's still going down.
Yeah, if the price is not able to come above the last 1.5 years of average, how the price gonna go move up? Oh. There will be the time, right? There will be the time when the price moves 200 EMA, like how does the laser gonna play out? So the 200 gonna go up like this, 50 gonna go up like small, and 200 gonna go like 400 gonna go like this, and this 200 will come like this. And whenever you see the 20 crossing the 200, like here, probably sometime, you can go long. And then now 200 and 400 will act as a support for your price. Okay. I will come and say like exactly, I will analyze this one and I'll say like whether can you average or not. I am against the average. One more thing. Do not average your position, specifically when it's losing. Do not average it. Why? Because when you average, then you think, oh, this is cheaper, but you might get another go down, and then you might not have money to average it down. Average when your level comes, not when the price comes down, when your level comes in. So for an example, let's go to take the laser. Okay, I'm just going to take the laser because one of you is stuck here. So if you see here, the price is not even following a 50 EMA, right? 50 is down, 20 is down. So if you better to follow 50 because most of the price react to the 50 and 20. 50 is like hardly mainly respectable for whenever you want to take the price. So as long as the price is below 50, you do not average. Okay, as long as the price is not below 50, do not average. When the price moves up to here, say for an example, this area about 1627, once it's above the 50, buy it and get out at 1822. Whatever price you bought, get out. Say for an example, if you are getting like 17 and you might get like another 10-15% interest, 10 or 15%, get out. Why? Because this 200 gonna act as a resistance. The blue line is 200 EMA, which gonna act as a resistance. And then it will bounce and then it will move up. That's how the price will react to anything. Now,
what's about the wish if you could?
Which one?
Wish.
Can I spell it?
WISH.
Oh, wish. If wish is a downtrend, I will let you know when you can exactly average, because so many people have struck in. Because here, like this was the area to buy. This was the support to buy. If you really wanna average, do not average below. Let me see, put on my Bollinger Band on daily, because there was a trap here. As long as price is like 761, there is no point of averaging it down. I would rather average at 761 because I will be able to get out at 924 rather than average at $4. I will let you know because I know many people are stuck on those one. I'm just waiting for the correct area for it to come where I can find there is a bottom out is done. I will know and let you know that okay, this is bottom out, and you average it with the stop loss. You average with the stop loss. Okay, but it's gonna take a long time. It's because it's like, if you see, there's no, I'm gonna put it down. See here is 20. Look at this one, 20, right? It came up, but then the 50 kind of didn't breach the 50 and it came down right away. And people bought here $10, right?
I bought at 11.
Yeah, because we are like, as a retailer, we supposed to make the top and the bottom. We supposed to make the top, not the bottom, right? Because we like to buy on the higher price.
Yeah.
Because like, I know like in the group is always kind of, okay, buy, this is very good, buy. Do not buy it.
Yeah.
Do not buy it, right? For me, this was the price to buy, but it didn't hold it. And there was a trap, and I was hoping the trap will not act it. And it did act. I probably get in at 680, and I had a chance to get out, but I didn't want to get out. And then of course you pay the price for that one, because I thought this was the bottom. It didn't work. Of course, I because this is for longer time. It's not a big expensive to hold it, so that's why I didn't. Otherwise, I would have got it out here. I knew it. I was getting like 15-20% in like 3 days, but I didn't want to get out on the wish. So, but what I'm saying is, if you see here on the wish, now based on our rules, which we just formed, do you think you wanna get in at this point of time?
No.
Or even here, like you are here 20, you don't have the die. And at the same time, if you see here trend line, what I said, when the price moves up like this, once it breaks, it's done. You don't want to get on here. The issue is like, when the price comes here and when it goes up, people think that, okay, this is the bottom out. We cannot decide the bottom and the top of the price. We cannot. So what our job is to play in between. If you just follow the simple rules, you would not buy it. You would have bought it here, for an example, because it's above the 20 or here, but you would have got out pretty quick. Your stop loss would have hit on the next day. And here you would have got it and you might have made some money and you got out here cost to cost. But that would have saved so much money for holding the price, right? Rather than holding, you just invest in somewhere else. So follow the simple rule that 50 is your like timeline. You don't want to buy any price who is trading below 50. Doesn't matter whether it's Apple or whether it's a Facebook or whether it's Amazon. Doesn't matter to you. Just follow the simple rule. Is that make sense here or no? I can go at any stock you want to say, and then even in the penny stock will act it like this.
So it means about 20 always a buy time.
Yeah.
Below 20 is always a get out.
Yeah, 20 and 50 is your line, because some stock will act to the 20, some will act to the 50. So check it out, which acts.
Oh, so it depends on
the stock. So for an example, FB, let's say, right? See here, FB is acting as a 50. Okay, I'm just gonna extra acting as a 50. Every time it comes to the 50, is react. 50 react, 50 react. Boom, 50 did not react. That means your time to get out and say bye bye FB. I will see you when you come on 50.
Oh.
Does it make sense to you now? The way I'm trying to.
Yeah. So
for you don't get stuck in the stock. Any stock. People get stuck in the stock. Why? Because they don't follow the simple rule. So here just give me a minute. Here, if you follow the 20, would have been gone out. But if you see here, every time price comes to the 50 and it reacts, that means your 50 is your rules for the Facebook. If it breaks the 50, you get out without even seeing what price it is you are getting out. When the 50 is breached, you are out from the stock. Doesn't matter.
So how we identify that this stock follow the 20 and this stock follow the 50?
So whatever the stock you are following, you need to let's say for an example, Apple. Let's see Apple. Each stock will act differently on the different price. See here, this doesn't respect the 50 and 20. What does it mean is like, now your standard, let me see, put on the 100. Okay. Let's put on the 100, blue one. So this one doesn't follow the 100 as well, right? But so that means like 200. So for you, the standard for this one will be like 200 because it's Apple, it's a good stock, it's a good company, right? So that means like, but it doesn't follow the 20, 50, 100 rules. It follows the 200. Even if you just follow the 100 for an example, you get out here, you get in here, get out here, get in here. So it might happen a couple of times that you are getting in and out, but that will save you a lot of money for holding their stops and getting that stop loss. You can just put the stop loss below here and move on. But for this one, you want to keep it like 200, right? Because it respect to the 200, right? Because it doesn't come to the 200. And because it doesn't respect 20, 50, and 100 much, you want to give respect to the 200. Okay, so depend.
That means that we can only know about the stock following 20, 50, or 200 by experience.
Yes, no, not by the experience, by looking at the chart. You don't need experience. You look at the chart.
No, my question was that how we identify that this stock will follow 20, 50, or 200.
No, the market is dynamic, right? Each and every we don't have the same fingers, same way. The price reacts to the different EMA and different RSI as well. Like, you know, when will come down. But every time, say for an example, which one is the another one which is like a blue? Let's say Amazon, right? For an example. Let's see what it just follow. So if you see here, Amazon follows the 200 mostly. Right? Amazon follows the 200 mostly. It follows 100. When the 100 broach, it comes down, comes to the over 200, take the support, moves up. Come close to the 200, take support and moves up. So this is Amazon. So that means that.
Did you get Brian?
Yeah.
Towards your left on the screen, if you move.
Yeah, here.
You see that it's respecting grid, I mean 20,
yeah.
right?
Yeah.
So if you want to bring that time frame to see which time frame is it moving towards, I mean 20. You see 20. That onto the top.
On so here?
Yeah.
Here?
So in that range, yeah. How do we find that? Like which time frame is it moving?
So our basic rule, like up to here, our basic rule was 20. When you don't have this kind of like data after 28th of September, you just follow our 20 and 50 criteria.
Oh, okay.
You just follow the 20 and 50 criteria. That's it. You don't need to follow. If you don't know, like, okay, this is too far, just follow the 20. And if you see here, even if you follow the 20 here, the price was 3,300 at the time. And currently the price is about the same price. This is all distribution. The price is giving the distribution. The big money are getting off.
Oh, okay.
One day will come, then the price will come to the 200 and it will just 400 is coming down. The price gonna go down. It will take a long time, but it will come down too, because this is all distribution from September 20 till today. And price is just like, if you see it like up and down, and don't regret if you come here, get out here and the price moves up, but at least you saved up from 320.80 till 2872. You saved it $400 anyways. So do not regret on those things, because you cannot get the top and bottom. You cannot predict the top and bottom, specifically when the price is very like all-time high. You cannot. There is way we can try to see how does the price can go further. There is a way, but on a simple, this is like a very basic. I'm not sure whether you guys knew these things or no, but it's my duty to let you know this is how you read the chart.
So when you're referring to this, and let's say, for example, on a day trade, high volatility market, and like how are we gonna, if you can refer one to that, that would be a big help. Yeah.
Okay. So which your favorite stock for the day trading? What's your favorite stock?
DWAC.
Huh?
DWAC.
The thing is like, do not please do not try to be a multimillionaire in a day. Do not, because this kind of stock, which are momentum stock, they're not gonna follow anything, because these are news-based stock. And even if you follow, see here, this is like an hourly time frame. It's breached the 20. Done. Get out, because they don't have a data here.
Right.
If you just go 15 minutes, like when you are doing the day trading, its price is moving up, follow the 15 minutes at least, don't follow the 1 minute, follow the 15 minutes. Price moving, okay, you after second day, you know that, okay, it's respecting 20, respecting 50 somewhat. Once it's moving below 50, get out. Do not hold it. Just make all your rules is always need to be followed. Your rules need to be followed no matter what time frame you are using. Just follow that rules. Because I'm not like, you must have stuck on here. What price did you stuck in? What price? 70, 90? You probably made this probably high, 91. Anybody stuck here in this DWAC?
I didn't touch it, but just for learning purpose.
Yeah. Oh, okay. Okay.
Yeah.
And not anybody got stuck. Okay. Hopefully. Thank God.
No, just learning purpose. But
Yeah.
your chart is clearly showing that below above 20 you need to enter, and below 20 you need to exit.
Yeah. At least 50. If you don't want a 20, because you just sometimes this get it 50, get out 15 minutes, because it doesn't, this one is like not following. And this is all distribution. Whatever you're seeing is all distribution. Price gonna come down. There is no way price gonna go high. And
so when you're saying distribution, what are you referring to like that?
Distribution, that means like big monies are getting off from that position.
Oh, okay. So big guys, the big sharks, and they're getting out of the question.
Yeah. So
okay.
If you see here, like I'm plug, and a plug is a very good example for the distributions, and I will say how. Whenever the price, this is like very good example. Whenever the price on the higher goes higher, okay, and it's stuck in the range, and this range, if you see like 12 Jan till 16 February, that's about like a month. You have seen the price has gone like so much up from like November till the January, within like 2 months. It rallied from almost 300 to 400% within 2 months. And now the price is not doing anything. Price is not doing anything. It's not making a higher highs. And if you see, this is like 20 is like broken. It was respecting 20 all the time. 20 is broken. That means something wrong and fishing in the price. Okay, there is something wrong and the fishing in the price. Let's see the volume. Always also remember the volume, this range will be a little bit higher at the time. Whenever the distribution comes and the accumulation comes, and when the accumulation comes, the price will dry out. Price will dry out. People will think about the volume, but the volume usually dries out in the real accumulation phase. What does the accumulation phase is? Like big money is acquiring it. Okay. For an example, if you see here, check this out, right? This period, right? Do you see the price is just kind of not moving anywhere? The volume has dried out, and that's happened for like 26th of March till 1st June, like about 2 months. Volume, I like, if you don't know like whether it's accumulation or distribution, you don't need to remember anything. You just make a blank like this one. I'm just gonna change it to the color so you can see white, and I'm gonna make this one as a, do you see this box, right? Can you see? I'm just gonna cut down the moving averages here. So do you see this range, right?
Yeah.
The price is going in a range, volume is down. Once the price breaks out from this like phase, whether it's an uptrend or the downward, okay, doesn't matter. Whenever it goes up, that means the price is done its accumulations and is going higher. Your stop loss will be below here somewhere. Below here somewhere. And if the price, say for an example, breaks down here, So like breaks down here, that means if you're shorting, your stop loss will be above here. Does it make sense or no?
Yeah.
Whenever the price in the range, right? Always look for the breakout. And this is the best place to go long or short. This is the best place to go long or a short, depending which side it gives the breakout. Nobody knows whether it's accumulations or the distribution, but usually whenever the price is going like on a sideways and the volume dies down, that means big money is acquiring on slowly on a like a small chunk, because they don't want to go price to go higher. Everybody knows, because when the volume comes in, everybody gonna jump on the trend. And if you see here, second thing which you need to remember, how does the volume work? When the price is going down here, if you see the volume is dried out, what does it mean is the people who held bought it here is not selling it out. Okay, and let's go on the higher. Okay, because people bought it here too much, and let's go on higher. What does it say? Now here you will say, okay, the volume is died down, why doesn't is the accumulation, right? But the one thing which I said, whenever the price breakdowns on the other side, that means you need to be more cautious. Do not get into those things. And the same time, put on the EMA and see which EMA does it respect. If you make the 20 EMA as your or 50 EMA as your first rule, that means you will have the smaller stop loss. If you keep 20 EMA as your like 200 EMA as your like rules, you will have the longer stop loss or like longer wait, because 200 is like way slower than the 20 EMA. 20 EMA is faster than the 200 EMA, right? Smaller the time frame, faster it results. Faster the result it gives, right? Because 200, it takes 200 EM days for this to move, whereas this one takes only 20 days to move. Does it make sense here? How to read the price and why, how not to get into the stock, like get not stuck into the stock. Does it make sense here?
Yes.
Yeah, I'm not sure, like, did you guys knew this one or no? How to read the price?
I didn't know, honestly.
Okay, good. At least like, that means like I'm providing something extra which you didn't know, right?
Yes.
That's the main purpose for we come together and talk about this one, right? So anybody has any questions so far? And please ask the question, because if you don't ask the question, I won't be able to know whether you understood or not.
For daily, for example, if we are doing the daily trading,
okay,
so how we can analyze,
okay,
for example, plug is gonna go up or down?
So for daily, we have to go look for the first, start with the like top to bottom approach. What does the top to bottom approach is like? Look for the higher time frame, then the smaller time frame, and then the smaller time frame. When you are planning for the day trading, first thing which you need to see, let's day trade. Okay, I'm gonna remove everything because I can plot these things anytime I need it. I'm done. I don't have it. I don't need EMA. This is how you look for the start and get ready for yourself. Why I have it so much? Because you don't have to plot. So if you need a confirmation, you just plot it and you get rid of those things. You don't need any indicators to look for the price. Okay. Now,
for example, we are getting or we are starting 9:30 or
yeah. Now this is the before 9:30. You don't do it at 9:30. You do it before 9:30.
Before 9:30.
Okay.
For example, 8 a.m.
Okay, yeah. So this is before 9:30. Okay. Now, by looking at this one on daily, you can see, okay, this was making like a lower lows and it just broke out and making like a higher highs. I kind of missed this stock here, which I was supposed to get it, but I didn't get it because this was the nice place to go long. So now, so that means like is making higher highs. First thing. if you see here, it's making higher highs. So that means like the trend is uptrend. That means you want to go long. Now look for an hourly time frame. When you do the hourly time frame, you see any, let me slow it down. Let's see high. Let's look for the any resistance. Okay, here is the resistance. Okay, simple thing. We're gonna do it. We're gonna plot the horizontal line. Okay, I'm just gonna put very busy. Okay, one here, and one here. Okay, and the last one is here. Okay, those are my lines. Now let's see though how this line works. It's still here. Now I need to put this lower line. So if I put here, this will, I'm just kind of doing it very basic, and then we're gonna go for the deep. I'm not matching. Like if you see here, it's matching. What your job is to try to match as many as possible, trying to get the bottom and the top. If this kind of thing comes, that's fine. It happens a lot. But now if you see here, it's not going to move 39 to 48. So we need something in between. What we need, let's see. On a day trade, I'm just going to look for some more support and the resistance. So do you see this? There is a gap here. So I'm going to look for that gap. I'm going to make this one nicer a little bit. So it kind of connects those two. And if you see, I did put it over there, but it kind of still worked here. Okay. This one, yeah, this is perfect. This is on a day, broke it down. So now this is your 15-minute chart. I'm going to go 15 minutes chart. Now this will be one more line, will be here, and the trend line will be like here. I'm gonna put this trend line to here, and I will teach you how to do it. Okay, I'm just kind of showing like how to prepare yourself for those one, and probably I'm not gonna keep those one because this trend line is kind of okay. This will work like this. Okay, so what will be your job on a day trade? You don't want to buy at 38.42. Once the price moves, your moves like here higher, okay, higher, and comes and take this support, then you go long at 38.42, which will be your area of interest, and get out at 39.70. Simple. Or if
but how we know that this is a support or this is a resistance?
Okay.
So is there,
So whenever I draw the line, these lines
right,
will act as a support and the resistance.
okay,
Because that's why we did the first thing. Put on the horizontal line whenever you can see some levels.
right,
I didn't like kind of find it or anything. Just put it on. This is just for a, like very basic. Any,
So,
like say if you don't have like 10 minutes, right? If you forget to do it before you get into the any stock, do this kind of activities just for 5 minutes. Right. And then
one question here. So you draw that black line, right? You said when it crosses this resistance line 38, 36.
Yeah.
So is it always the case it's gonna go up and then come back again to the resistance and bounce back?
Yes. Yeah. If the price is on a trending, I'm just gonna move this one. Now on those day trading, we need to use the different EMA, which is 4, 9, and 18. I will come to on those things later, but those are the time frame. You need to look into those things. Whenever the price is moving, like say, like this kind of thing, whenever you see the green line is a 4, red is 9, and the purple is 18. Whenever the price is moving above 4 and the 9, like
sorry, green line is
4,
red
is 9, purple is 18.
Okay.
Yeah. Right. So whenever you see this kind of way, that when the price moves out from the big resistance and is not coming down to 9 EMA, it's not reaching 9 EMA. That means the price is trending So that means you might not get the price to come on your level. Say at the same time, you put the VWAP for a daily purpose. And once it goes above the VWAP, the price usually tends to go higher. As long as it's above the 9 EMA, you want to be in the trend. That's the another rule, which will come talk later. But I just kind of gave the glimpse of it, how you can look for the day trading. Day trading is a different time frame, right? You use a different EMA because you just go in and out. Okay. Any question? Because I don't want to get into the too many things like this and get you confused between like Y20, Y4, all those kind of stuff. Okay, so this is just like you do it charting, regardless what time frame you are using. Top to bottom approach. Yeah.
So yeah, again the same thing that Y4, 9 and 18.
Okay. So the question is like why? Because when you are doing the day trading, is always get in quick, get out quick.
Right.
Right. So in order to get those things done, you need to have the information which are quick. When you have the 20 EMA, it takes a 20, like if 20 period EMA.
Is it 20 minutes or 20 hours?
20 minutes.
20
so,
minutes. Okay,
so if I put the 15 minutes and if I put the say 20 EMA, okay. So this EMA is the representation of last 15 times 20. That's about 300 minutes. That's almost like 5 hours.
Oh, okay.
Right. So this represents the last 5 hours of average. Whereas if I put this 4, 9, and 18, so this green represents the last 1 hour, 9 represents about like 2 hours, and 18 represents about like last 15 times 18, about like 250 minutes. That's about like 1 day. Right. That's why when you are in the day trading, you want the smaller time frame where you can get the more information.
Sorry. I'm stuck here.
Okay.
So like a green line, if we say last like a 4 and the red line 9,
yeah,
and blue line 18.
Yeah.
So it means 18 minutes.
No. Okay.
20,
no.
Sorry.
Don't get yourself confused. Look for the time frame. What time frame we are using?
15 minutes.
15 minutes. So 15 times 20. How many minutes? 300 minutes.
Why 15 times 20?
Because this is a 20. Sorry. This is 4. So 15 times 4. Sorry. 15 times 4.
15
How many minutes?
4.
How much?
16.
1 hour, right?
Yeah, 1 hour.
So this represents the last 1 hour data.
Okay.
Because when you are say the 15, whatever the time frame you are in, if you are like 9, multiply by 15. That's what you are looking for. If I put it like for 5 minutes, okay.
So how we know that this is a 4 and this is a 9 and this is a...
Whoever going closer to the price will be the smaller time frame.
No. Yeah. I'm asking that how we know that green is a 4, red is a 9, and blue is a...
You can change your color. You can change your color.
No, not a color. Not a color issue.
Yeah.
The number 9, 4, and 18.
Why we choose those things?
Yeah. No. Okay. Yeah. How we know that this is the 9, this is the 18, and this is the 4.
Because like whenever you see the price, you will know. This is like,
I think he's asking. I think it's every number is you choose the color to the same. Let's say, for example, you choose 9 and you set the color for green, so that represents 9. That's what he's asking.
Okay. That's why if you see here, I have the 2 EMA. If you see here on the top, this is like I have the 2 separate indicator. One which is 4, 9, 18, and other is like 20, 50, 100, and 200. I kind of kept it separate.
Oh, so for daily, we only need to choose 4, 9, and 18?
18, yes. and the other one 20, 50, and 100 is for the longer time frame.
Longer time.
Because I don't want to place so many indicators. That's why what I do is use it like if I put 20, is more gonna get more confused. So what I do is I turn this off. And now this is 20.
So 4918 is a just number that we pick.
Yes.
For daily.
Yeah, for the daily day trading.
Okay.
Okay. And what I did was because I had like on the left, if you see on the top here, I kind of kept this one over here. So I don't have to plot and change the number so many times. It makes it easier for me. That's why I have the like 4, 9, and 18 here. And if I want the 20 EMA, I just go to the 20 and put it on. So I know, okay, this is 20. And what I usually do is I usually keep the smaller, now like a smaller time frame as a green and higher as a black. So whenever I see the 20, like if I'm 20 here, putting 20, so I know this green is 20. And the blue here is like my 200, black is 400. Because this is my number. So I remember that number.
Okay.
And I remember the color. You can change it to whatever the color you like. Okay.
Now you can explain that if we 4 multiplied by 15, then okay, good.
So now if I say for 5 minutes, okay, if I say the 5 minutes here, so this represents the last 5 minutes, like the 5 minutes EMA for the last 4 period. That means like 20 minutes.
20, okay.
Yeah. And if I say like 9, so 9 times 5, that's like 9:45. So this is the last 45 minutes data, and this is last 90 minutes data.
Yeah, got it.
Got it? Understood?
Yeah.
Anybody has any question or something regarding these things?
Might want to check with the other three people, I guess. Yeah. They're being quiet if they're catching up.
Just please ask the question. Please ask the question, because if you don't ask the question, I don't know whether you are getting it or not. And I'm trying to be like more like very basic. These are the very basic things, and I'm not sure whether you guys knew or not. If you are like new, that's great.
Jigar, just one quick question about VWAP. You will explain it later.
Yeah, I will explain that later.
Okay, thank you.
जिगर भाई,
just give me a minute.
ये चूंकि बीच में 5-6 दिन होंगे, तो इट्स पॉसिबल कि आप कुछ हमें hands on काम भी दें, तो जिसको
what I'll do, and you just go to any 5 charts, whatever the charts you want to go. Don't go for the penny, but go for the 5 charts and plot things and see how does
which charts?
Any 5 of your liking, doesn't matter, but don't go for the penny stock like $5, $2 stuff. Don't go for those things, right? Go for any charts, anything which you like, plot it and see how the price react, and ask the questions in the group. Okay, and once we're gonna finish the support and resistance, and draw me the support and resistance for those stock which you wanna buy or which you wanna do invest in, and then we will discuss about it. Okay, why I'm saying your stock? Because like if I'll give the stock, that means like will be biased. Whatever the stock you are invested in it, and that means you might have the 5 different stock, other person will have the 5 different stock, and then we'll at least have like 20 stocks. And like if you have the like similarity, 15 stock and 5 will be the same, and then means like everybody has a different scenario, different thought process, and then we'll come together and see which chart is better. We'll discuss about that chart. Okay, like whoever has done like nicely the trend line and everything, we'll discuss more about that and how we can make it more like perfect, right? That's what we're gonna do.
Okay, so we send our charts in the group, right?
Yes, yeah, everything you can send in the group. We will check it out and we will discuss about it.
Okay, thank you.
Okay, any questions so far?
No.
And everything kind of following how to read the price?
Sorry, I have a very little basic question.
That's fine. Basic is the most important thing. What we are doing here. Yeah.
So how we know support and resistance level.
Yes, yeah, that's what we're gonna, that's our next slide we're gonna do. That's what we are coming into. So what is support? What do you support means to you? Like if you wanna just give an answer, and then we're gonna
mean is just a bottom where
no, it's not the bottom. Okay. Support means is where the price can hold it level.
Oh yeah.
Hold it levels, and resistance where the price gonna react to the level and can come back. So in a simple word, support where the buyers are present, resistance means where the sellers are present. Okay. Yeah. There are two kinds of support. One is the dynamic support. One is the static support. What do you mean by the dynamic support? The support which changes, support and the resistance which changes all the time. That's called dynamic. And support which is there and it's not changing is called static. So
is it possible that the static and dynamic?
Yeah. There are two. So whenever
support mean that it should be static, not dynamic.
It's a dynamic too. Okay. And if you have observed, when we put the 20 and 50 EMA, 50 EMA is changing all the time, and it was still providing the support. So that means it's a dynamic support.
Okay.
But when we drew the like static line, so like this horizontal line, they are static. They're not changing. They are there already. Whereas on, say for an example, let's put the 20 EMA here. If you see here, 20 was providing support here, which was the $23. Then it's provided support on $31. Right? So the support is changing. Right? This support is changing because this is dynamic. Right? So whenever the EMA are, they can act as your support and the resistance. If you see here, I kind of missed this one, big opportunities. Here, check this out. This is 400 EMA, which is very, very, very strong. And it took support like 1, 2, and 3 times. And after that one, look at it, how much it rallied. Almost 55%. If you have got this bottom and put the stop loss just below here, you'll be making like 1:5 for sure. But I missed it. It happens, right? You cannot keep an eye on everything. So this is an example of putting the EMA. And if you see without putting like horizontal line, we know that, okay, this is acting as a 400 acting as a good support. This is like a bear trap, right? And this is the bottom out because price went up, came over here, is taking a support. That means the plug has bottom out, right? So price for the plug is not going to come to the $24 anymore. If it comes, it will come to like $29 and it's going to go further up because the trend has changed. For the plug, like if you remember, when the plug was about 56, 57, I was talking about $8 and I gave like different levels. And this was another 18 or $20 was another level too. Like this is, and when we give the label, that means like the price will react to those things. It may change the course of its directions at that level, right? Because there is some support and the resistance is present at that level. So if I say $8, doesn't mean that $8 gonna be there. But if, say for an example, 17 is broken, that means the next support is 8. So if you want to wait until $8 and get like $9 or $10, that should be your entry point, and $7 is your like stop loss, something like that. So for an example, I gave this C3I, right? I gave this C3I. I'm not sure whether you guys remember or not, but I gave this C3I to the people that if you want to get the bottom out, the things, you can get it. And again, it's below 20, below 50. Even though I gave, why? Because there is a logic. Whenever I give something, there is some logic, and that's the only reason why I don't give more attention to this 20 and 50. I give attention to more on the price.
So here I have a question that you said that it was at 17. So the next support level is 8. So how we know that the next support level is 8?
That's what we're gonna come up when we go about the support and resistance.
Oh,
okay. That's we're gonna come. So what I'm saying is like, I ignore this 20 and 50, right? I ignore this 20 and 50 when I give the like buying at 40, about 46. If you see here on this time frame, price is coming down and it's kind of making like higher highs now, right? So if you get it here, like this is long, this is 45, 46, up to get it here. And if you put your stop loss like 41 here, and your target is like here, my target was like here, 52, yeah, here. So if you see, it's like 1:32, and the next resistance probably for this one is around here, I think, yeah, around here, 56, sorry, 56, up to here. This was like probably gonna come for the C3I. Otherwise, we'll take the stop loss.
How we know that?
I'm gonna teach those things. So don't worry. I'm just gonna say those things. So whenever the let's go deep down into this thing. Let's plug.
What stock is it?
C3I.
Oh, C3.
AI.
Okay.
Okay. Let's go to the plug. Easy. Okay. Turn down this. Turn off this EMA. We don't need it. Turn down these drawings. We don't need it. Okay. Now let's. Okay, sorry about that. So I'm gonna go to a monthly. I always start with the monthly. Okay. Monthly, horrible. Okay. Wow, look at this one. This is very good example of the accumulation. I'm gonna put on the volume. Do you see the volume? This is monthly. Okay. This is monthly. If you see, the price is moving in a range. Volume has died down. And how many months it take? 14 till 19. 5 years of accumulation. Okay, 5 years of accumulation. So people who has bought it here and hold it, it becomes the multi-bagger for them. Why? Because see here, volume is kind of died down. It's not much. When the volume is like below 20 EMA, like this is like the yellow black line you are seeing is EMA, 20 EMA. Okay, it comes automatically here. MA length is 20. You can turn it off if you want it, or just keep it on. That's okay, up to you. But whenever the price doesn't have that volume and kind of slows down, look for those kind of stock and take a bet on those things. They will be multi-bagger. You might have to hold it a little bit longer, but they will be the multi-bagger, right? And this is like call for investment purpose. So the monthly is kind of gives so much info. And if you see here on the monthly too, the price was coming down, and it kind of gave the breakout, right? It's kind of holding this area. So what I'm going to do, I'm going to put one horizontal line here. Cancel it out, put a horizontal specifically. So I'm going to put one here. And do you see the week here? So I'm going to cover the week. Okay. And just follow this process if you really want to get the proper support and resistance. Okay. This is, I'm showing like a bigger picture. You can start with the day, weekly, day, 4 hour, 1 hour, 15 minutes, and the 5 minutes. And then your support and resistance will be stronger. Okay. Does it make sense to you guys? What did I do? And we will adjust everything. Does it make sense to you or no?
Yes.
Yeah.
Okay, right, very easy. Everybody can do it.
Yeah.
Now I'm gonna go on a weekly. Okay, now, so this is, if you see here, this is acting as a good support. Now, because we are doing on a weekly, do you mind if I just move this one here to make it more better support?
Yeah.
Right, makes sense here. Now, because the price is going higher, can I do one line probably from here? Because this is like a top, because it also covers this one. Can I do this one and put one more line above this doji? Can I do this way? Does it make sense to you or no? Probably if you want, you can put it here too. Doesn't matter. That's fine. Does it make sense here?
Yeah.
Right. If you don't know, just let me know. Okay. Because
So
this is the basic.
Why this line is here? This for resistance?
Okay. This is for the resistance on the top, because we got the support, right? Because we are going down. So we need to find the resistance too, right? Because we are planning for the day trading, right? That's why and can we, just for the sake of putting a resistance here, can we put the resistance here because it supports here, it covers this area. It's always a zone. Okay, always remember the area of the support and resistance is always a zone. Okay, I'm gonna put those things. I'm gonna put two lines everywhere.
When you say always is a John,
what I mean by, so like say for an example, the price between say 35.46 and 35.75, that will be your zone when the price can go in and come out. So for an example here, this is weekly, right? When we go for the day, I will kind of show you more. Okay, for zone, because like this is like a bigger zone. So if you really want to add your position, and if you knew this area, like probably from here, you would have said, okay, if I get here 23, you need to keep your stop loss below here. Why? Because price already penetrated this area. Right? Price already penetrated this area. That means like there are some people who are still here, who might, if they are not holding this price here, the price will come down to the $14. Does it make sense? Because if you see here, after immediate from this one, this is the big candle and this is the small candle here. So I'm gonna put, if I put here, does it make sense? Like the stop, price went up, came and retested. So this will act as your good support level. Does it make sense or has a confusion here?
No, it's good. Yeah, thank you.
Right. So if you see and what I did, I just put the horizontal line. Horizontal line support is the better support than the trend line support. We're gonna come on the trend line too, but horizontal support is better than the trend line support. If you want to pick the support which is stronger, I will prefer more on the horizontal than the trend line. Okay, because trend line is also dynamic because it changes. This is like constant. Whatever the price moves up, this will act as a good support. Now, anybody has any issue so far? And if you want, can I just put one more line here and this one as a zone, act as a zone? And you will ask me why. Do you have any, do you know why did I put it or why shouldn't I put it?
No.
Okay, I'm just gonna move this area here a little bit. Here, okay. Now, whenever you see, and I'm gonna, rather than putting these two lines for you, makes it easier, I'm gonna make it as a zone, okay? So you don't get confused so many with the so many lines. Okay. Okay. And this is how I do my charting. So it's like you are getting what I do. Okay. It's nothing. I'm not hiding anything. This is what I see as the price. Okay. So Why did I put this as a zone? And I'm gonna makes it easier for you, so you don't have to kind of too much thinking and put some color in it. Okay. Now, so if you see here, the reason for this one is like price. When here, price was like going in, coming back, going in and coming back. And from the top, when it was coming, it was holding at that area. Right? Does it make sense? Or no? Like if you see here, the price was holding on that area. It was holding here. It was holding here. It was kind of not going up. So it was moving in this area. At the same time, because this is on a weekly, okay? Remember guys, this is weekly. So they were getting some support somewhere here. The price used to get the support somewhere this area, right? And whenever you get the support in the past, the support will become your resistance and resistance will become your support. They will flip. They are the support and the resistance are like two sides of the coin. Means
overlapping each other.
Yeah. So whatever the support can become as a resistance, whatever the resistance can become the support. Okay. So always remember those things. So now, anybody has any questions or concerns about this zone? If you have any question, you can ask it. So then we can move on to the daily. And then we will narrow it down further.
One quick question.
Yeah. Yeah.
Like for day traders,
yeah,
the main thing, or for the long trader, is like to see the trend and the support resistance trend lines, and how the candle types helps, or reversal pattern, or those kind. Do we really consider, or how we consider those?
It will come. Like whenever we go, let's just focus on the support and resistance. Don't forget about the reversal pattern. Forget about the different kind of pattern. We don't need anything.
Okay.
We don't need anything. And trust me, if you know how to plot the support and resistance, it's more than enough. Keep it simple.
Sure.
Trust me.
Yeah.
So if you have any question about the support and resistance, let me know, because this is the most important and the basic. And after that one, everything gonna be very easy. Anybody has any question about the support and the resistance? This zone.
Yes, Jigar bhai, we made this rectangle, this pink rectangle.
Yeah.
That this is support and resistance area, right?
Yeah.
But we see that.
Yeah.
But we see that a little bit down, there is even better support and resistance.
No. Okay.
This one.
Okay. Yeah. This one. This area. I know you're talking about this one.
Yes.
If you remember, we were at the monthly. When we started, we were at the monthly. So we know this area is support. We know this one as like, and as I said earlier, it's a zone, always a zone. I can put like this too, right? This is the zone and this is the second support. But what we are going is we are going from weekly, monthly to daily, weekly to daily, and then hourly, because we want to see what's going to happen next week. Okay. So that's why we just gonna ignore other one, because you're gonna go this area gonna slower and gonna become slower and like smaller and smaller. This area will become smaller and smaller. Okay, it will become smaller and smaller, because if you really want to plot this one, this will plot like this. Another will be plotting like this. Like I don't want to be like putting so much support and resistance for you as of now, because then it will be like more confusing, because we are on the weekly. I just want, this is actually the area if you are really want to put it, but I'm just gonna keep it simple, and then we will move further. When we go to the second chart, we'll just startingly gonna go exactly where we're going. What I'm saying is like, we just identify the zone. This will be your no trading zone. Okay. If you want to lower it down further, this will be your no trading zone. That when the price is between those areas, you don't want to get into those prices. After that, we will go to the daily. That's where we're going to find the exact area of support and the resistance, what we need. Okay. And if you see here, we kind of narrow it down already. And if you put this one area here and kind of cover here, this area, yeah, I'm not gonna, yeah. And you will ask me why only this area? And if you see here, what happened with the price? Now look at the price action. We are not using any indicator. Okay. Now understand the price. How does it react? So when the price was coming from top, it breached this area. Okay. Then went to this our resistance, because this one acting as a support earlier here. Okay. It breached that area. What did I say? Support become resistance, resistance becomes support. So this area acted as a resistance. Then the price came up. Then the price broke it up. And this area, actually, when we are doing on a day trade, like here, this area, because this is support area here as well. Because if you see here, this was the support here, because we are coming from top. So price come over here to this area, take the resistance, take the support here, again the resistance, broke the resistance here. We already found this support, and price is kind of moving sideways, and it's kind of respecting. Once this area is breached, it went up and came close to the support. That means if you really want to go long, either you can go long here or you can go long here, because it already kind of supported a couple of times. Again, I'm going to repeat one more time, and then you can ask the question, because you might have like a lot of questions. How, why? Okay. So in order to get this support area, shall I just extend this my trend line here? Can I extend my trend line here? If I put this way here properly.
Yes, yeah.
I can extend here. For this one, if I want to extend like probably this, what I'm gonna do, I'm gonna use this zone, makes it easier, because too much line gonna get confused more. And I'm gonna get rid of the lines. Okay. I'm gonna remove this line too. So this, as everybody knows, gap act as a support and the resistance. Everybody knows that thing, right? Oh no.
Yep.
Okay, it's probably everybody knows the gap has to be filled, blah blah blah, right? I'm gonna remove this one too. This one. If you see here, the price came and breached this area, fill up this gap. So can I take this gap as my support area? Can I or no? Because this price came over here and go further down. And more you get the practice, more the like slower this area will become. Okay. If I'm gonna go further down, I'm gonna move a little bit further. So if I do this way and move this line little bit up, I'm not worried about this one, because I'm just doing here. Okay. I'm not worried about this one, because what we are planning here, right? Because like remember, whenever you had a chart, you had the picture up to here. You have the picture up to here. You don't know what's going on the left. Sorry, what's going on your right. Right? Do you know anything what's going to happen tomorrow? No.
No.
So what you're going to do is you're going to put the support and resistance here, right? So when you put the support and resistance on here, if I put, this is my like top line. Wait, let me just kind of close this up. So makes it easier for you guys. And then we will draw the support and resistance of your liking. Okay. It's not like I want to just draw this one. So remember this thing, like there are two people draw the line differently. It's up to you, the way you want to draw it. What I do usually, sometime I cover the body to body and sometimes week to week. So usually what I do is sometimes put like this area, because some people give the preference to the closing. Some people give the preference to the high. What I do sometimes is like most of the time I give preference to the both. Wherever I get my areas which can define me, where I get the most touches, that's where I put my lines, right? So here I get 2 lines here, right? I'm just going to remove this one. So I cannot ignore this price. That price is already made the high of this one. Okay, so I cannot ignore those price. Second one, which I will draw it here because I'm not sure what's going to happen next day, with the price going to go up or not. But I cannot ignore this area as well, because this area had so many touches already. If you see here, like 1, 2, 3, 4, 5, 6, 7. 7 times each tried to go. This was the high at this time, this point of time. I have like how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 11, 12 days. Out of these 12 days, price tried 1, 2, 3, 4, 5, 6 times already to breach this high. It already tried 6 times after it made the highs, and 1, 2, and 3 times before it tried, it made the high. So I cannot ignore this price. So this will be act as my resistance level as well. And this one over here, sorry, and over here, can I ignore this price? You tell me that when the price is taking support from this area all the time, can I take, if I want to ignore, I can like place this one here. And if I really want, I can place this one here. Okay. So if you see this, I have some range, 57 to the 61. So do you think this is the perfect way to draw the line or no? Like, I'm not trying to ignore the areas. I'm not trying to ignore this area as well, because it was the high at the time. It took the support and then it went high. So I'm not ignoring this one. I'm not ignoring this one. I'm not ignoring that area. I'm not ignoring this area. Does it make sense to you? Or if you have any question, ask me here now. Then we'll just say how we can predict. Any question or concern? Ask me, please. Do ask.
No, maybe maybe we'll try more, like do our own, then might have questions.
So that's why if you don't practice, the one thing which I said in the group as well, if you're not coming into practice, you won't get this area. For me, it took a very time. I used to spend like 6 hours, 7 hours just to draw the correct trend line and the support area. And then once you get practice, you will avoid some area, you will ignore some areas, and you will give more preference to some areas. Some people will draw like this one and like this, and it's perfectly fine. Okay, it's perfectly like that. The thing is, like, whatever works for you, whatever the price gives more comfort to you, is up to you. You don't have to draw the exactly what I draw. Okay, you don't have to do that things. You can always do it the way you want. Sometimes go to the indicator, put some, makes it easier, support and resistance, and you put it like this, and you will see here, like, okay, this is my support, this is resistance, and it's automatic. Do I recommend? No. Why? Because then you won't understand the things which you need to focus on. Okay, so now this is area. Now what I was saying, damn, what I was going to do here. Now this, you know, this one is like, oh yeah, I remember. To make it easier for you on yourself, confusion को दूर करने के लिए, to remove any confusion, go to the line. Okay, go to the line and cover this area wherever you feel that, okay, this area has to be covered. For me, like if I want to cover this area on here, it's okay. I will cover this area, cover those area, cover that area. And if you want to draw some more line, does it make sense now for you to make it easier? Like you need more touches. Okay, let me just kind of do more touches for you. I mean, this one only gives the preference to the closing, not the week or anything. So once you put like this way, and then you adjust your price by going through the candle. And once you reach those things, you just need to kind of move them around a little bit, not much. Does it make sense?
Yeah.
No, like if you don't know, just let me know, because this is very important. Because if you are not able to get these things, this will not help you. So don't get embarrassed that though you are asking so many questions, and even if the silly question, do ask me. But unless you plot by yourself, you're not gonna know how to do it. Okay. Does it make sense? Like how you find the support and resistance? Like the support and resistance are like nothing but the joint. Okay, nothing but the joint. So always look out for those joints.
Sure.
And yeah, go ahead.
No question, sir.
Okay, no question. Okay, no question. Okay, so what I'm gonna do, I'm gonna remove this, all the rectangular. More the like touches, better the support is. Okay, now that was the horizontal support, right? That was horizontal support. Now let's go to the trend line. If I do the trend line like here, and if I continue to do these things, do I get the touches here? Do I get these touches the way I want it? Because does it provide the support? Like it touches here, touch.
Yes.
Right? Okay. So that means it's a valid trend line. It's a valid trend line.
Is it dynamic support?
It's a dynamic support. Why? Because the support is changing every time. Right? If you remember dynamic, static, that's fine. If you don't remember, doesn't matter. The thing which you need to remember, trend line can provide the support. Okay, it's a different support all the time, every time, that's fine. So if I do this touch here, and if I go like this, and if I ignore that price, but if I put it here, I need more touches. Actually, as long as I have like 3 to 4 touches, I'm okay with my trend line or the horizontal line. So if I do this way, see, if I do this way, does it make sense that, okay, I'm taking here. Now the question comes, why did I take the body here and take the wick here, right? Why didn't I do this way? Right? Why do I do this way? Right? You can do this way if you want to. But why? For me, what I do is usually I give more preference to the price which are nearby rather than this one. Okay. So my job is to touch more candle here. If I do this way, I can touch 1, 2, and 3 candle. And then I extend this one. That way I can at least have like 4 candle touches. Whereas here, if I do it, either I have to cut through the body, these two, which I don't want it, or touch to only 3 one. And then I have to ignore these 2. But if I do this way, I am getting 4 touches, 1, 2, 3, and 4, and this is almost there. So at least I'm getting more touches. Here I was getting 1, 2, 3, 4, 5, 6, and 7 touches. And some people will do like this, but then you are ignoring this one. What about this one? Price already went at that point. So what people do is, over those kind of issue is they put a zone. They put the zone here as well. By putting this zone over here, they will try to cut, like, touch all those wicks and everything. And as I said, everything is a zone. It's not one line, it's a zone. So the price has reacted on those different areas. That means there were some buyers here at that time. So when this buyers moves out, the price will fall because there is no support here. And when you have when the price moves from here, this area, which we talked earlier, can act as your support, and from that the price goes up and then fall back again if they breach this area. Does this make sense here? Anybody has question? Ask me, please. And if you have the computer on your side, you can draw the same thing on your side too. Holy, nobody's talking.
So what we expect from here, price will go down.
So yeah, so once this, now our job is to see how does the price react. How does the price react? If the price breaks out here, there are two possibilities here. If the price breaks down here, it can come here, retest it, and begins his journey, another journey. If the price breaks down here, it can go retest and come over here, and then it will decide its journey to the downwards, because now we have to look for the different support and the resistance. Like, because this is support and resistance, so this will act as a support and resistance.
So we don't know the future.
No, we don't know the future. We never knew the future.
We don't know the future, but we now need to decide. So how we can decide whether it go up or down?
So now you need to wait for the confirmation.
Oh.
What does the confirmation means is like, now the price is here. So that's why sometimes I say it's on a crucial level, right? When you're on the crucial level, now you put on the EMA. And say now, for an example, I'm going to remove those brush. Now, by looking at this one, you can say, okay, wow, the 20 EMA is providing the support. You have the trend line support. That means like this is very crucial level. So the chance is, if this is broken, the price can come to the 56 level. Okay. Now, if I play replay here, let's see what happens on the next day. One more day. Okay, boom. Now, wait here. See. What happened was, it did provide the support on the next day, which was on 22nd for 12th of February. Till acted as a support. And then, as I said, if you go on a smaller time frame, if it allows me to go smaller time frame, I'm going to highlight this one if you cannot. On a smaller time frame, if you see here, next day we were here. Next day price break, went up and fall again, and the next day again price touched this area and then fall. Does it make sense here? What happened?
Yeah.
If you are on the smaller time frame, right? Because if you are doing the day trade, what happened here was, here you waited for the price move down, you waited for the price to touch. And if you see, if you go on a smaller time frame, I'm just gonna go further, because when you are on a day trading, I'm just gonna move this, I'm gonna highlight. If you're I'm gonna move this one. So how does we are doing the everything? Let me just show you, because this was the price action for the previous day, right? So we did say probably for an example, I'm just kind of doing quickly. Okay, this is my support here. This is my, because this is like a day's low. So this is my support here. Okay, where does the price reacted the most? Okay, so you can see here that price reacted the most here. So this is my reaction of the price. I'm gonna leave a kind of close a little bit here. Okay. So what did I do? I quickly drew the line. Okay, this is my support level because price faced the support, because you know this area, you don't know what's going to happen here those days, but you know already what happened. You put on here, you put on the support. And why did I put this the middle one? Because if you see here, price has reacted to this area. When the price fall, it took the support from here, went up, took the support here, went up, took the support, went up, breached the support, and this support is acting as a resistance. Next day also it acted as a resistance. So when the price, and here even here as well, if you see here, the price fell, resistance, take the resistance, and then fall. So if you are really wanted to get into those kind of trade, you just wait for this area to get breached. Once this area is breached, at least 70 to 80% cases, you will see this retracement. And how much retracement will come? We will talk about that one too. I'm just going to give the idea. It will be like 50 or 60% of the Fibonacci. Go to the top and the bottom here. And if you see 50 or 60% Fibonacci, right? 60% rejection. That's what we call. This is the 61% rejection for the Fibonacci. That gives you an idea. Okay, the price is not strong, is weak, right? Those things we will plot later, but that's how we see. Now, if you are on the EMA, when you have the 4, 9, and 18, when the price is below 18, is not able to breach about 20, like 18, you can see, oh, price is very weak because it's already trending below 18 EMA. And in the past, if you see here, 18 EMA is goes like it tried to breach the 18 EMA, but it fell. 18 EMA, it fell. On the past, here, check it out. Price was on not able to break 18, not be able to break 18. Price fell from 14, like from this area, not able to breach 18, not able to breach 18. That means 18 acting as a good resistance area. Does it make sense? Like how we combined the moving average, support, and the price action. Does it make sense here now?
Yeah.
And if you see here, did I look for the EMA first, or did I give more preference to the support and the resistance? Support and resistance are the first thing which you need to look for. EMA and any other indicator comes later. Did I use MACD? Did I use the RSI? No, you don't need those things. You can use those things as a confirmation only. You do not take the trade just based on those things.
Because they are lagging indicator.
They are lagging indicator. Everything is the lagging.
We only need to confirm for future, not the lagging.
No, not for the even future. Like future, you know it. Why? Because you know that this is 18 is broken. If I get this down, wait, you don't even need to know the future. You know the future. EMA is telling you the future.
Oh, EMA is telling the future.
Yeah, it's telling you the future. Like see here, our rules, the basic rules. Price is about 20, you buy it, buy about 20, you delete. And if you see here, 20 EMA, every time it comes to the 20 is reacting. Every time it's come to the like 20 is going up, you go long. Every time 20 is broken, you go long. And the prices went below is 200. If you see here, this yellow black line is 400. If you see here on the 400 is providing support. And when the okay, let me just kind of put this support as the black is 400, right? Once you know that 400 is providing the support on 15 minutes and that 400 is broken, then now this 400 going to act as your resistance. The 20 is broken, 20 is going to act as a resistance. So you don't want to go long when the 400 is not providing you support for the smaller time frame as well. Because this is 15 minutes chart, right? If I go with the 5 minutes chart, let's see, it might be 200. It cannot provide the data, sorry, because of because we are doing the replay, it's not able to provide the data. Let me see if I can provide. No, it doesn't provide some data. Okay.
Yeah, that's good.
That's good, right? So what I mean by if you see here, this is on a 15 minutes.
Yeah.
You know this one, like is providing the support. This like 200 is like above the 200 is providing the support. 20 is providing support. 20 is providing you support. So you don't want to go against the trend. You just want to follow the trend line. There are different ways you can see whether it's confirmation. RSI sometimes can be overbought or oversold for a longer period of time. Let me see. Let me see here. RSI. And it's not like that I don't use it. It's not like that I don't know how to use it. What I'm trying to say is like, do not rely on these things. And if you see here, if you sold it here based on RSI, like here, based on RSI, if you say, okay, I want to go short, but the price went a little bit higher. Why? And if you see, like, let me see if you find something here. Where it is gonna give the false signal. I'm gonna try to find the false signal. This is not false. Okay. Here, if you see here, the price just came over here, but it didn't go to the oversold and it just fell. Right? And it was like overbought here. Everything was overbought. Wait. Okay, yeah, here.
Which one is better, the Fibonacci retracement or
Fibonacci? If I have to choose it, if I like support and resistance first, right? Second is Fibonacci. Third is the Bollinger Band. Okay, that's what my like go to 3. Like if I need to pick up only 3, I will pick up those 3 and then the EMA.
So Fibonacci and what we do manually using price level. So is it not the same thing?
No, the Fibonacci will give you an idea. Like if Fibonacci is also is kind of one of an average. Fibonacci says like the price will react to the 38, 50, 61 or 73 or 78 level, right? It will have some reaction. That's the Fibonacci number, because like say 1 plus 2 is 3, 3 plus 2 is 5, 5 plus 3 is 5 plus 3 is 8, 8 plus 3 is 13. That's the Fibonacci number, right? Is the sequence is the number. So surrounding us, most of the things follows those patterns, right? That's why they are the like a unique numbers. So price usually, like if you see here, like this price, yeah, without even saying, I can say this is like reaction at 60. Like, okay, if you put the Fibonacci, it will be reaction from 50 or 60. See here, 50. People will draw like this way, like there are 2 ways to draw. Doesn't matter. For me, I draw one way and it works because you just have to flip your number in your mind. Right? This is 50, like 60 reaction from the 60, and you go from the top to bottom.
GK.
Yeah.
Sorry, this said we need. I have to go somewhere. I will go to the recording little later. Then.
Yeah, and if you have any questions, just let me know. Okay.
Sure, GK. Thank you.
Okay. Anybody has any question or concern about this one?
Yeah, we discuss Fibonacci and retracement.
Fibonacci will come later.
Okay.
Why I'm not including Fibonacci here? Because then it's going to be too much.
Okay.
Right? Because first we are focusing on the very basic, and then we go to the Bollinger Band, then we go into the Fibonacci, VWAP, stochastic, RSI, candlestick, VWAP, everything we're gonna cover.
Actually, we need to focus on the future prediction, not the lagging indicator.
Yeah, that's why I don't want to go on those things.
Future is the most important. Lagging, everybody knows that.
Yeah, that's why I don't want to go to the RSIs and everything. RSI is nice to know it, but the only thing which will help you is your support and resistance. Trust me, it helps.
Okay.
Like by looking at the chart, you will know, okay, this is my support and resistance. This is how the price is gonna react.
Okay, great. That's great.
Right? So by looking at this chart, at least you know how the price is reacting. You don't want to go short when the price is above all the EMA. Simple, right? You don't want to go short. You just want to go long on those kind of positions. Specifically when you are doing like a day trading, you don't want to go short. For the investment also, you just want to look for the higher time frame and how the price is reacting. Right? Any question or concern?
Yeah, it's good. Yes.
Amjad bhai, Harish bhai.
जिगर भाई मैंने पहले ही पूछा ये प्राइस लेवल जैसे हम सपोर्ट एंड रेजिस्टेंस ड्रा करते हैं और साथ इफ वी यूज द Fibonacci retracement, means is that okay to at the same time, or it will clutter the price level?
No. So what I would suggest to use the less and less things on the chart. Very less thing. What you do, for an example, if you want to do the Fibonacci for a sake of doing the Fibonacci, you just put the Fibonacci like this way. Like I'm just kind of drawing. I'm just kind of making it up. Very easy. Okay. You put those things and now draw the line. Okay, this is my 38, this is my 50, and this is my like 83. Okay, because those are the most important level. Those are the, and then what you do, just get rid of, like if you want to keep it, just hide it. So you know this one level, like okay, this is my level which I need to look for. Doesn't matter 50 is here, 30 is here. You know this, these are the three important levels. If the price is coming from the top to bottom, you will know it.
I don't know these levels.
Yeah, you will know it when we do the Fibonacci.
Okay.
Like because when you draw the Fibonacci, whenever you see this line,
right,
colors, what did I do is I just put the line on those colors, so I don't have to look for the Fibonacci. I just kind of put the line. Wherever you see the color, do you see this color? 61. I'm just gonna put this one. Just a minute. So, okay, sorry. If you see here, I'm gonna put this off too. Just gonna show you the numbers for the Fibonacci. Right? If you see here, this is 78, 61, 50, 38, 23. What I did was just whenever you see the different color, I put the line. That's it. Just put the line. When you do those things, that means you know these are the important levels for the Fibonacci. If the price is coming, if I draw the other way around, this will be the 78, this will be like 78, this will be the 60, this will be like 38, and this will be the 23. Other way around. You don't have to remember all those things. Just put the number and go for it. You don't need to like make a ratta. You know, we in the school, we used to do the like give like putting in our heart and write it down on the paper for the exam. No, there is no exam. You just need to know how to use those particular things. You don't need to know how this Fibonacci kind of comes in. You just need to know, okay, how the Fibonacci works, which are the important levels.
So currently you use Fibonacci, right? So
will
it be beneficial that if we draw our price level manually, or just Fibonacci is enough?
No. First is always a price. Okay. Without the price, can you do the Fibonacci? Without the price, can you do the Fibonacci?
No, price action is there, but what I'm saying, price level tool that we manually say this manually we draw support and resistance, right?
Yeah.
Using price level tool.
Yeah.
So then we can also draw the support and resistance using Fibonacci. So should we use both, or one of them is enough?
No. So when you are doing the day trading, use the Fibonacci to look for the how much retracement it can happen. So for an example, DVEC, right? Just kind of, because this was a more of a our favorite momentum stock. I'm gonna go to the 15 minutes chart. Okay. And so there is, look, there is no volume here. But for an example, this level, like this day, right? I'm just gonna take this day or this day. Okay, let's say this level, because that gives you more idea. So on those days, if I do the Fibonacci, what you do? Take the top, recent top, take the recent bottom. Okay, I did those things. What I do, I'm gonna put on 38 for that particular day. Okay, this is for that particular day, 20, and here. Okay, now I don't need a Fibonacci. Okay, now you know that one. Okay, this was the rejection for the Fibonacci. Then price is not able to make those things high. Do you want to get in? Because if it's not able to break Fibonacci level, why you should get in? Don't you want to have the question in yourself?
So here at 108.25, the line should be little bit higher. So should we adjust it, or should we
no. We are not adjusting. We are just kind of draw our line. This is the Fibonacci line. We kind of draw it already. What our job is just to make sure we plot exactly at the same place. And a little bit off is fine, because it's not gonna be like make a big of a difference here. This is perfect. Now I'm hiding. So this is like 38, this is 50, this is 61. Doesn't matter whatever level you're seeing. Most important level are those threes anyways. So prices went up and then came down. Okay, let me just kind of give you some, how does the Fibonacci kind of work? Okay, so you don't know those price, right? I'm just gonna hide those things for a while. And I'm gonna hide this one too. Okay, this is how the price looks like, right? Right, we don't have anything, right? How you draw the Fibonacci? You took those high, and this, which one is your recent low? This is your recent low. Does it make sense or no?
Yes.
Okay, right? This was the high, this was the low. We don't know what's going to happen, right? And this is what we are predicting, right? We are into the predicting business now. So I have my line, which I'm going to put it correctly. So I'm going to put one line here. Can I put on the 50, right? 50. Second, I'm going to put on the 38. And this one, I'm going to put it on a 61. Okay. Always remember, if the price is not able to breach this 23 level or the 61 level, that means, like if you are like this red line, if it's not able to break it, that means the price is very weak. Usually the price retraces up to the 50 or the 60. Okay, up to 50 or the 60. Now let's go and see how does the price react. Okay, because we don't know what's going to happen, right? So, and this is all on yours. Okay, we are not touching anything. We didn't put any price, right? This is all automatic. Now I'm going to stop. Now, we didn't see the price. Of course, we knew it, but did we focus on this price, or we just focus on these two candles? What did we do?
We focus on
those things.
Focus on those things. Did we use any indicator here except Fibonacci?
No.
No. And did the price move? Like, did I move the price for 115? Was the static? Was it? Did you know the 115 before, or you came to know after? You knew it
that before.
You knew that before. That means you know the price can react at that level, right? So this is how you can use the Fibonacci. What did I say? When the price is like If the price goes higher, that means price is very strong. But if price just comes from like 23, 32, and the last is 50, that means price is very weak. Okay. When it comes to like retrace from the 23, that means the price is very, very weak. This is like somewhat weak. This is can go either way, but like still kind of weak. 61, be cautious, do not take the short positions. 78, avoid short positions.
So as the number increase, so it means the chances are going up.
Yeah, the price is stronger. The more the price retrace, that means the stronger the price is. Okay, and this is the one example. Tell me any stock and we will draw the Fibonacci on those things.
Do you want to check on the Lucid?
Lucid, okay.
For day trade, we should draw Fibonacci at what level? So at what time frame?
Like usually, you can do it in 5 minutes too, but 15 minutes, I like the 50 minutes. Okay, let's do it on 5 minutes. Fibonacci will work on even on a 1 minute, but the smaller the time frame, smaller the reward, bigger the time frame, bigger the reward. Okay, now I'm gonna, because you're gonna wait something like up to here, right? I'm gonna cancel from here, right?
Sorry, what time the finishing?
This is the 5 minute. This is the 5 minute. Can you ask a question again?
Sorry, what time the class is finished?
We can finish it whenever, because like, let's finish it like 10 minutes. Let's finish this example. Okay.
Okay. Okay.
Yeah. And that's what, and earlier I said, don't worry, we will make it up. Even if I'm late, it's not about like timing. I don't look at the timing. It's all about like what we are finishing, right?
Yeah.
As long as you understand, that's fine. If you don't understand, we have to go slow. So now,
actually, I have to go, but
okay, just 10 minutes. Just give me 10 minutes, okay? And we're gonna wrap up. So this is the high, and this is the low. So check it out here. So now let's put on our Fibo magic, Fibo work. Okay. I'm just gonna put the lining. Okay, I'm not doing anything. Just gonna, and I just put like 23 just to kind of sake of putting, so you don't have to worry. If you don't have to put it all the time, I'm gonna hire this Fibonacci. So did we do anything extras? No, right? What we just did, we just the Fibonacci. No indicator, nothing. That's just the price work. Usually this is like 23, 38, 50. So price might come up to this level usually. Okay, let's see. How does the price react? So if it's not breaking 23, right? And then like this is like main our area which we are concerned about, 38 and 23. It's not coming up. That means the price is kind of still weak. You don't want to go long on those price if you're doing day trading. Right? So this will be your level. If you're short, if you can short it here and put the stop loss here.
So it means our stop loss should be at 37.56.
Yeah, above that one, like this one, 38, 35. Because if this one is breached, you need to have those some buffer. Right? 38, 28. You need to just a little bit higher.
No, for not for shorting, for long.
If you're long,
yeah.
Why you want to go long when the price is not able to react here?
Okay.
Why you want to go long? Because price is not even coming over here.
Oh, okay. If it crossed this line, then we go.
Then we'll think about the going long.
Okay.
And when we go long here on the bottom.
Oh.
When we go long bottom here. If you are long, if you really want to go long in this front, your stop loss would hit. But I would go long here. Why? Because, say again, just gonna, and I would say like why, and I will give them my proper reason. Okay, I'm not just gonna say you should go long here, and I'll give the proper reason. Okay, So whenever you have this price, that means you have some support here. Okay. You still have some support. If you really want to go long, you can see there is some reaction here. So this is acting as a good support, right? So I'm going to put it here. So because you are day trading and you are doing on a 5 minutes, so you really want some like this, you cannot ignore those things. So if you want to go long, this is the long, you act it here because you are doing a day trading, go long here. Sorry. The wrong position, go here. And your stop loss will be here, just below this line. And you still need some buffer. Okay. And your entry is gonna be not here, but just a little bit higher. Right? Because you never know that price can come, react. Usually when you see those doji, just get onto those like a body of the doji. Okay, that will be your price. So our target is 1:2. Usually, right? This is like 1:2. So this will be your target. Okay, almost at 2. Okay, nothing matter. So now, if you really want to go, this will be your long position. This will be your short. Okay, so you are risking $2 to, sorry, you are risking 70 cents to get $1.40. Okay, and this will be for any stop. Okay, let's see how it goes, whether we get achieved our target or not. Almost 10, right? And boom, our stop loss got hit, right? But usually, now one more thing which you need to remember, whenever you see these kind of big candles, rather than putting the stop loss up to this level, try to get out before this big doji, always, and it will work. Your stop loss will be like the same. Do not touch with the stop loss. Your risk reward will be a little bit higher, but there are chances that you will come profitable. Let's put any other where we don't know the chart. We will hide the chart and we will plot this one within like 5 minutes. Let's do it. Give me one shot. Any stop.
PayPal.
Wish.
Apple. Okay. Apple. Come fast. I'm gonna hide this Apple so we don't know. Sorry. I'm gonna hide it so we don't know where we're going. Right? Everything against like as normal as we can, like put it on a 5 minute chart. I'm just going like random. I don't know the date. Right? So that means like we don't know the price. We are not, if you go here, okay, we're gonna do for this day, for the 18th of October. Okay. Okay, 18th of October. Now, where is Apple? Okay, here. Now, see here. We don't know what's happening. This is our like tomorrow, right? We don't have any idea what's going to happen. First thing which we do, put this top line, right? Why? Because this was the high, this was the high, price reacted on those things. This was the day's low, which we needed. Okay. So this one, when does the price reacted? Where does the price reacted? Price reacted probably on this area. Okay. So our charting is ready. We don't know what's going to happen. So now let's see if the price goes up, comes here, we go long. I'm going to put the scenario. Okay. I'm going to put the scenario. If the price goes higher, this will be our entry point. Our stop loss will be like below here. We will put 1:2, probably here. Okay. 1:2. Let me see if there is any resistance. There is no resistance.
No, you are drawing Jigar bhai, now you are drawing manually. Is it the same thing if we use Fibonacci at this point?
I haven't done the Fibonacci yet. I haven't done the Fibonacci.
Yes, I understand. What I'm saying, we draw support and resistance here manually.
Yeah.
So if we use, let's say, Fibonacci, is it the same thing? Or
no, Fibonacci, you might have the different number. Like if you do the Fibonacci, this will be the different number. Completely
yes,
different
I understand this.
Yeah.
The number will be a little different.
Yeah.
So which one is preferential in day trading?
Manual first. And once the price goes high and you want to enter, if you miss your entry, then you use the Fibonacci to see where you can get the proper entry.
Okay, so Fibonacci should be for higher time frames, right?
No. Any time frame. You can use it any time frame, but to just get the proper entry. So for an example, before I go further, to answer your question here. Okay, say for an example, the price went up and it came down, but you missed this, right? You completely missed this move, but you want to enter into the Apple for a short. Okay, for an example. So what I do is I use the Fibonacci because this was the low at the time. When you see it, you draw here up to here, and then you look for the retracement level at the 50. You look at the retracement level at the 50. Why? Because that's where the most important support or the resistance lies. Usually. And here, if you see here, it break the 60, 68, but didn't sustain. The next candle just came back. And then from that, the price went down. So if you miss your entry here, like you completely missed this move, and you really want to go long or short, you can put the Fibonacci just to make sure where you want to enter. You want to say, for an example, enter here, right? 50, because we say like 50. This is your 50. And rather than putting on a 60, you just need some buffer. Always. If you're 60, put the high. Always put a couple of Fibonacci ahead as a buffer for a stop loss.
So it means that if cross 50, we should go long. If below 50, we should go short.
Short, yeah. But this is the 5 minutes, right? Usually I prefer 15 minutes. Usually, because this has more candle. Because what happened here, if I'm not sure whether I can plot it or not, but I'm just going to random here. If I put the 15 minutes here, if you see here, the price just touched 68 and the next candle was down. That means the price is still weak. So you can go short here, because you're doing day trading, what you can do is you can go short here, right here, because price here, you can go short here, put the stop loss just below this candle and 1:2.
So this Fibonacci 0.5 number is automatic?
Automatic. Everything comes automatic.
Oh, okay.
All the numbers comes automatic. Okay. All the numbers comes automatic. Here.
I have to go now.
Yeah. Sure. Go ahead. I'm just gonna finish this one, and you will have the recording, so you can watch it out.
Okay. How long take more?
Like, I'm just we started a new example, and the question goes. Just give me like 5 more minutes. Just 5 more minutes. Okay. That's it. Just 5 minutes, no more than. Okay, and then we'll wrap it up. So our question was like, we will go long here and we go short here, right? We go short. If the price moves below that one, this will be our target. We maintain our 2:2. Okay. Okay. Now let's play. So we know our price, right? What we are doing. Our stop loss hit, and then you can reverse the position if you really want to. Achieved?
Yeah.
Right? And we didn't do anything. We just kind of followed the price.
Yeah.
And the price went up ahead. So again, whenever the price, you need to remember these things too. Whenever you have the gap up and gap down, we usually use the Bollinger Band, which I'll teach later, just for a glimpse of it. Whenever the price breaks out from the VWAP, gaps out and enters the Bollinger Band and cross the VWAP, go long. That's another setup which we'll discuss next week. Okay, that's kind of things. This is the price action always. Okay, but if you remember, just because of these two things, we did follow our target. Why? Because we wanted to go long here above this one. This was our stop loss. So you get one, you lose one. That's how the market works. Okay. Now we're not gonna have any more things, but if you have any questions or concern, you can sit and ask me. And
next session, can we learn how to apply Fibonacci?
Yeah, we're gonna apply Fibonacci, but you need to work on your support and resistance.
Okay.
Okay. Draw at least 5, and we'll discuss about it. Okay.
Okay, great.
And then we'll go like different like patterns and the word, and we will discuss about the real price action.
Okay, great.
Okay.
Thank you. Thank you.
If you have any question, you can ask it. And if you want to have to go out, you can leave the class. No issues on those. We're just going to answer the question. Take care.
Really, thank you so much. It's a very informative session. So thanks a lot.
Yeah, thank you. Like at least you now understood like how to read the price a little bit.
Yeah.
Right? Rather than where you go long and when you can go short, when you get out from the stock. Right?
Yeah.
Rather than becoming a bag holder, which is our common use, right?
Yeah.
Okay.
Thank you so much. I'm just leaving now.
Okay, yeah.
So so next Saturday or Sunday, both 2 days, or the class will be
next Sunday. Let's put it on next Sunday. Okay.
Okay.
Next Sunday is Diwali, so we will try to kind of wrap it up a little bit earlier, and then next week we will kind of catch it up. Okay.
Okay. Earlier is better. Earlier is better. Okay.
Okay. Any question, Amjad bhai, Vanit bhai, Harish bhai? Any question? Any question? If you have it, ask it. If not, then we'll wrap it up the session.
Jigar bhai, if you have time, can you please take a look at PayPal?
PayPal is down. I can see. I gave the PayPal like when it was 300. Sometimes people think like, oh, I gave them ridiculous levels, but this is all price action. Like, remember, see here, the price went up, tried once, tried second, and it failed. And if you see this retracement will be about 40. Let's see Fibonacci retracement, how much the retracement is. Wait, this is 50 or 38. Let's see. See, 60 level rejection. Price has to go down. It has to go down. There is no way price is very high. Look at the weekly chart. Look at the weekly chart. See here. What did I say? When the price goes up, it has to come down. It has to come down. There is no way. And it's like, if you see here, like head and shoulder pattern, kind of. So what you want to see in this one? Okay, I don't want to like become biased. Tell me what you want to see in this paper. You have
just it? I wanted to see if it is going down because I have some shares that I bought last week.
What time? What price?
234. 234.
234. Not bad price. That's fine. It can come. Let's see here. If you see here, I have my alert here. Buy call for PayPal. And this is the good area actually. This area is very good area, and that's why I marked it. So if the price react here, like this is weak, still weak. Like look at those EMA. Like price is weak. Price is below 20, 50, and this is like below 200 as well, right? This is 200, and this is coming 400. So 227 is very good area for support because this is dynamic, right? So you need to also watch for the support, and the price is already kind of fell so much here. So there might be some retracement up to this level. Okay, like 250 or something. But do you think like it's gonna go further up? I doubt it. It's in a downtrend. Okay. Even on the weekly, if you see here on the weekly, the price gonna touch and meet this level, which is 218. If you see here that my charts, I kind of put it on those one. Why? Because this is 20, 50, and 100. So 100 might provide support here. In the past, 20 was a good support on a weekly. Once it broke the support, it acted as a resistance. Then it very easily broke the 50, right? And it's not even able, like it tried, but failed to kind of close above the 50. So the next target will be like 100. And this is like a good area support too. Like, this area, I would say this one. Like this area will act as a good support area too. This is nice support too, but it already penetrated. Like if you see like 1, 2, 3, 4, 5, 6, 7, 8. There were 8 touches here, and then it was like just one candle just to breach those area. So if price comes to the like 214 to 18 area, I won't be surprised. I won't be surprised for the PayPal to come like to that area. And even here, the 20 is coming. See here on a weekly here too, like 224. So you are on the kind of good conditions. Monthly closing is below this area, which I don't like it. But you can hold it up to the 223 is breached, because those will be like good area for you to hold it, because from price might reverse. If you will see the doji somewhere here and then upward movements, you'll be getting 258 and then the price fall.
Okay, thank you very much.
Thanks. Any question? That's everything. So thanks guys. Now make sure you do your practice. If you don't practice, it's not going to help you. So make sure you do the practice. Okay.
Thank you so much.
Okay, thanks. Good night. See ya. Goodbye.